Hello, and welcome to this beginner's guide to investing. Investing can seem overwhelming, but it doesn't have to be. In this video, we'll cover everything you need to know to get started with investing. From understanding the different types of investments and investment vehicles to creating a solid investment strategy and managing risk. Understanding different types of investments. There are many different types of investments, including stocks, bonds, mutual funds, and real estate. Each type of investment has its own benefits and risks. Stocks, for example, are known for their potential for high returns, but can be volatile. Bonds, on the other hand, are typically less risky, but offer lower returns. It's important to understand the characteristics of each type of investments before you start investing. Part 2. Investment vehicles. Investment vehicles are the different ways you can invest in these various types of investments. For example, you can buy individual stocks or invest in a mutual fund that holds a variety of stocks. You can also invest in exchange-traded funds or ETFs, which are similar to mutual funds but trade like stocks. Real estate investments can include buying rental properties or investing in real estate investment trusts or REITs. It's important to research and understand the different investment vehicles available to you. Part 3. Creating an investment strategy. Once you understand the different types of investments and investment vehicles, it's important to create an investment strategy that aligns with your goals and risk tolerance. Your investment strategy should take into account factors like your age, income, and investment goals. A common rule of thumb is to invest a percentage of your portfolio in stocks that corresponds to your age. For example, if you're 30 years old, you might invest 70% of your portfolio in stocks and 30% in bonds. Part 4. Managing risk. Investing always comes with risk, but there are ways to manage that risk. One way is to diversify your portfolio by investing in a variety of different investments. This can help reduce the impact of market fluctuations on your portfolio. It's also important to avoid making emotional investment decisions based on short-term market trends. Instead, focus on your long-term investment goals and stick to your investment strategy. Part 5. Getting started. Now that you have a basic understanding of investing, it's time to get started. The first step is to open an investment account, which can be done through a brokerage firm or an online investment platform. Many investment accounts have a low minimum investment requirements, so you don't need a lot of money to get started. It's also important to continue learning about investing and stay up to date on market trends and economic news. In conclusion, investing can be a powerful tool for building wealth over the long term. By understanding the different types of investments and investment vehicles, creating a solid investment strategy, managing risk, and getting started, you can start on the path towards achieving your financial goals. Thanks for watching this beginner's guide to investing.